Tesla stock was just minding its own business today, doing really good for the vast majority of the day today. It was up about 5.5% heading into the end of the day. Things looked great. And then we started to really sell off the last 20-30 minutes of the trading day or so. You closed up 2.5%. So you gave back more than 50% of the move higher we had today. Apparently because there's a new Elon Musk rumor that has to do with Tesla. This time, part of it was spread by Charles Gasparino on X, which he is the first one over at Fox Business to spread fake news, fake rumors. I mean, it could be something wild, like Lyft is going to buy Uber. It would be the other way around logically, but he just spreads kind of crazy narratives. And, well, apparently he writes on X, breaking, Musk has told people he plans to spend the next 4 months working on Doge. He's aiming to cut $2 trillion from the budget through Doge. Once Doge's goals are met, inflation will be dropping to 2%. Musk has said he worked so hard on Doge, he's sleeping in his White House office. It says more now at Fox Business. Now, if you're confused why this sent Tesla stock lower, because essentially if he's sleeping in the White House, he can't possibly be in Texas running Tesla or in California running Tesla. So essentially, this new rumor is Elon Musk is taking a 4-month hiatus from Tesla, that he is just not running Tesla. And sheesh, let's be honest. Tesla does not need Elon. It doesn't need Elon to run day-to-day operations. With that said, that would obviously be a big problem if, Elon is not working at Tesla over the next couple of months. Now, clearly, I don't think this is correct. I think it's probably safe to say he's spending less time at Tesla, but what are the positives? What are the negatives to this situation? One with a logical brain could say, if Elon could really, influence the budget that much, that would be massive for Tesla. That he's essentially working for Tesla right now. Okay, one could make that argument, and I will probably make that argument and agree with that. That if they can cut that much government waste, inflation will be coming back to 2%. Now, the question is, how much pain does that cause the economy? That's really the deeper question that goes along with that. But again, Elon doesn't have to spend all of his waking seconds at Tesla for Tesla to be successful. Things are going right at Tesla. It's probably a good sign that Elon does not have to spend all of his time at Tesla. If Elon was spending all of his time at Tesla, then you could make an argument that, Tesla, something is going wrong. Okay? That's clearly not what's happening right now. So this rumor is starting to be spread as if it changes anything for Tesla. And that is absolutely not true. Okay? And again, bringing down inflation with the work that Elon is doing in Washington is going to be a massive positive for Tesla. Just imagine what happens to Tesla stock when inflation comes down to 2%, when getting an auto loan is yet again affordable and practical and reasonable, and we start to actually value these long-term AI stocks as I think they should be valued, which is a lot higher than Tesla stock at $336 per share. Tesla could create a lot more value for shareholders by cutting the government's budget and bringing inflation lower than I think he could do at Tesla every waking moment of his days, essentially. That would be my argument to this. Could this weigh on Tesla stock though? Of course. I mean, that's kind of what happened in Q1 of 2023 on the conference call when Elon bought X, okay, Twitter at the time, changed the name to X. People were concerned that Elon was not spending time at Tesla anymore, that he wasn't the CEO of Tesla. And Elon came out and confirmed that that was nonsense, okay? This is another one of those situations that, could ultimately impact Tesla stock, but it's probably something that you shouldn't give much weight to, if any at all. Now, Donald Trump has just said within the last hour that he wants to shut down the Department of Education immediately. We'll see what this does to bond yields. Shutting down a large government entity like that, cutting back on a lot of waste, is likely to bring down 10-year treasury yields over the short to medium term, over the next couple of months. As Elon put it, I think is a very respectable thing to assume. But coming tomorrow, we're going to have big data that will move bond yields yet again. Following a 9 basis point rise today, 10-year treasury yields are at 4.627%. So it's actually a miracle that, Tesla did so well today, that a lot of our markets actually did well today, because there was a lot of pressure coming from bond yields. Now, here on the day today, you had 118,000 shares that were covered today. So that could have been part of the move higher for Tesla, was short sellers covering. Now, I want to show you guys this because it's incredible. The release date for the new short interest number from the SEC was yesterday. Tesla currently has 59.61 million shares sold short. This is the lowest or smallest short position in Tesla's entire history. Okay? You have never, ever had Tesla stock with this few of shares sold short. Pretty much ever. Okay. Obviously, on the split adjusted basis, it's going to look a little bit different. But you've never had a short interest of free float of 2.13% before. It's never happened. Okay. You're usually always in the threes. In prior years, I mean, it was a lot higher. Like in 2021, you were 5, 6, 7, 8% sold short. Sometimes reaching 10%, 11, 13, 20%, and a lot of the time, like 2019, you were up to 30% sold short. Okay. And that's where a lot of short sellers got blown out. Why I'm pointing this out is because I think it's very important. While the stock has fallen from $488 per share down to $337 per share at the time of recording this video, short sellers have been covering on their short positions, meaning they do not think this is a good price to be short Tesla, meaning they don't think Tesla is going to fall too much further, that the positive things going on at Tesla make them want to get out of their short positions. So one of the biggest red flags that potentially we could see right now is a large increase in shorting activity in Tesla. That would tell you that hedge funds and institutions were gaining confidence being short in Tesla, meaning that the stock could fall a lot more. In fact, you're seeing the opposite of that. You're seeing short sellers covering to a degree in which we have never seen before. Again, 2.13% short interest of free float has never been achieved before. In fact, this marks 6 weeks in a row, because this is bi-weekly, of short sellers covering on short positions. Okay. Really, it goes back a little bit further than that. It goes back about 8 weeks now. You peaked here on December 13th, 2024. That's when you had the most shares sold short since at least August of 2024. So we'll just use December 13th here because that's kind of recent history, where you had 80.77 million shares sold short, 2.89% short interest of free float. That was on December 13th. Let's take a look at December 13th. That is when Tesla stock was at about $427 per share. Over the next 3 days, you went higher to $488, and you peaked out on December 18th. Okay. So in the next report, you can see a drop, and this was the settlement date of December 31st, 2024. You dropped from almost 81 million shares sold short to 67.4 million shares sold short. Okay. And then by January 15th, which was not that long ago, Tesla stock was a big swing took place this day. The low of the day was $405. The high of the day was $430. By that point, short sellers had covered another 4 million shares, down to 63.25 million shares. And now, as of January 31st, there's only 59.61 million shares sold short. So on a percentage basis, you fell 16.5%, then you fell 6.12%, and then you fell 5.76% in the total amount of shares sold short. And on January 31st, Tesla stock was a, $402 stock or so. I imagine in the next report that we get here in a week or two, you're likely going to see another drop in short interest because short sellers were covering their Tesla short positions from the all-time high over the last couple of weeks and months. I can't think of a better sign of confidence from hedge funds and institutions relative to Tesla that normally is a very shorted stock. I mean, if that's about as good as it gets. Short sellers, they don't want to be short in Tesla as the stock has fallen 30%. If Tesla was going to fall into the 200s, or, if this was just the start of a larger crash for Tesla, you wouldn't see short sellers covering here. You would see short sellers likely adding to positions. While they can't know everything, hedge funds and institutions and big money generally has more information than retail investors. So when they're making adjustments to their positions, shorting stocks, adding stocks, it can be a good sign, especially if they're all doing so in a collective manner. And it looks like they have. I mean, the amount of shares sold short has dropped almost 50% in essentially 8 weeks. That's a lot. And we've really never seen that dramatic of a spree of shorts covering in Tesla before. And I think a lot of it has to do with the robotaxi coming in June, the good news about, FSD potentially entering China soon, the new Model Y, the new Megapack factory that just finished up construction, Optimus production by the end of this year. All of those good things are likely why short sellers are covering on their short positions. Now, Jerome Powell today also did help out the markets a little bit by basically shrugging off the CPI report today that came in worse than expected in the morning. Jerome Powell basically said, we don't really care about 1 month of data. We really want to see multiple months of either good or bad data before we, come to judgments on inflation, on the economy, on what Fed policies should look like. And that's really why the markets kind of shrugged it off, because Powell did not sound concerned. Same was true from Fed Goolsbee today. He basically reiterated the same thing. Now, Jerome Powell also added something that was quite remarkable, in my opinion. He really discredited CPI and pointed towards PCE. He said people that really watch the Fed, this is like a general quote. He said people that pay attention to the Fed understand that the Fed uses PCE as their metric of inflation. And that, when I heard that, I was like, wow, so he really doesn't care about CPI. Now, Jerome Powell said that via the PPI report tomorrow, that they will basically know what the PCE report is going to look like. So judging off of the PPI report tomorrow, That's going to give the Fed a better understanding of where we are with their fight against inflation. Okay, so with that said, PPI comes out tomorrow morning at 8:30 in the morning. You're expecting 0.3%. So obviously, if you come in higher than that, that's an issue. If you come in low, that's going to be good. Now, core PPI month over month was at 0% last month. You're expecting 0.3%. So that's a big month over month jump. But again, you come in lower, that's good. You come in higher, that's bad. At the same time, we will get initial jobless claims at 8:30 in the morning, expecting 215,000, down from 219,000 last week. You'll get some other smaller data points, a 30-year bond auction, which could move treasury yields. We will have to see. The last one we had was 4.913%. Given some of the DOGE efforts, cost-cutting efforts, what looks like the start of fiscal responsibility in Washington, I wouldn't be surprised if 30-year bond auctions come down quite a bit in the auction, or bond yields come down in the auction tomorrow at 1 p.m. Eastern Standard Time. And that is something I will be paying very close attention to. And then on Friday, you get retail sales month over month, business inventories, all kinds of smaller data sets that go along with that. Now, we also have some earnings. Today in after hours, we had earnings from Reddit. Stock sold off. AppLovin stock went up. Robinhood went up a bit. Okay, Trade Desk got absolutely clapped. But none of these earnings until NVIDIA are really going to mean much for the broader market, but they can impact their specific sectors. Now, tomorrow morning, we will have Datadog, CyberArk, John Deere, Crocs, Sony, GE Healthcare, and others. And then tomorrow in after hours, we will have Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. Now, I would also like to point out the option activity in Tesla stock today, because there was quite a bit of it. You had 646 different trades totaling $615.6 million. So it was definitely a high dollar amount for Tesla option activity today, and it was very positive. You have an 80% positive order value, which is, a damn good number on a good or a bad day. And that's kind of the trend that we have seen recently, as short sellers have been covering on their short positions. As the stock itself has been falling, you've seen very bullish option activity really in the past couple of weeks that I mean, again, it's not the end all be all that Tesla is going to do great from here and it's not going to fall anymore, but it's a pretty good sign of confidence from the markets at large. And that's something I've been paying very close attention to and will continue to pay very close attention to for all of you guys, because if we do see a flip, that's definitely something that we should, take seriously. Now, here as far as sentiment for Tesla on StockTwits, you are bearish at 36. That's a little bit better than yesterday's 28. Today, message volume is high at 72 versus yesterday it was extremely high at 81, and the participation ratio today is normal at 54. Again, let me know what you guys think about this information down below in the comment section. Even to close out the trading day today, it looks like Tesla found a lot of support at this 100-day moving average at about $336 per share. You're currently at about $338 per share, so it looks like you found a lot of support there, even though we did have that negative rumor that came out towards the end of the day. If we find support there and can bounce higher, that's going to be great, but really we're not out of the danger zone until we get above 377 again, and then even to further that point, until we get above that 50-day moving average and or the 20-day moving average, which I don't know why that's not up here on the charts now, but until we get above some of these other important moving averages, then I don't think you're out of the woods per se for a larger fall. Now, if markets do take a turn for the worst, you're going to watch that 310 level to the downside. And if things get really bad, you're going to watch that 200-day moving average at about $270 per share. Honestly, based on what I'm seeing from hedge funds and institutions, covering on short positions, adding bullish option exposure to degrees in which we really don't see all too often, I don't think we're going to fall to that lower end range. That 200-day moving average looks very unlikely to me. But hey, I've been wrong before. Could be wrong again. Come to your own conclusions. Let me know what you guys think about this down below in the comment sections. Are you adding to your Tesla position here? Are you waiting to see if the stock goes lower? Let me know your thoughts and your plan down below in the comment section. With that said, Tesla stock is down 31% from its all-time high at today's levels. At the low of the day yesterday, you were down 33.5%. Yeah. That is crazy, especially given all of the good things that Tesla is doing right now. So, ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.